Hey guys, AKIL'S here. Welcome back to another weekend trading edge video as I whip you through the markets, showing you all the best trading opportunities that are on my radar for the week ahead. Want to apologize in advance, no video, no fancy editing this time through. It's Friday night. I'm going to be busy all of Saturday and all of Sunday, and I didn't want to leave you without a video, so I figured a bare bones video where we just look straight at the technicals and put all the goofy, funny stuff aside is better than no video. So hope you understand and respect that. Let's get started here with the Euro Yen. Euro Yen has recently come to a previous level of structure. If we look left, we will see that structure leaves clues. We have come to this level. We have probed and tested this level. However, we did not break and close above. I was trying to stuck between saying beyond and above, so I just did whatever that was. But we did not break and close above this level. We also have that loss of momentum pattern that we've been speaking about for the last few weeks. However, we don't have any divergence on the RSI confirming that. Regardless, this is a good partial setup for a trading opportunity. What I would love to see happen next on the opening candle is to get a lower low, lower close, right? That would be a confirmation of a 3-bar reversal and that inside bar break to the downside. Now, the downside potential is a little bit risky here. Again, we have this deceleration patterns with all this little wickage action up here, making it hard to tell where would price retrace to if we were to retrace to it. So that's where I want to take out my volume profile, my anchored volume profile tool up there, draw it on and see if there are any places that the market seems to be more interested in than others. We have a small little blip right here, but you can see our biggest interest level comes at a retest of our previous levels of structure right here, this mesh point between resistance, and support right there. So if I had to pick two levels, I would say a very conservative level, 164.50s. A more aggressive level is going to be about 164.30s for this bearish opportunity. Pound yen, we have something at market. It's hidden, but I know some of you guys can see it because if you watch this channel, you're probably somewhat familiar with advanced pattern formations. The question is, which one will it be? So what we're going to do is we're going to label this thing out. I'm going to draw my Fibonacci on first just to make it more clear. But you're going to see that my initial starting point is going to be right here. This is going to be labeled my X to A. Actually, I'll just do this. It's here to make life easier for me. This is going to be our X to A, our swing high to swing low. This is what kicks off our pattern. We have our retracement right here, which is going to be our A to B, our failed extension right to the downside, which is going to be our B to C. And you can see right at market, I'm going to bring a 127 in because that thing's always a little bit weird. So let me just draw this in the way I like to draw it in. And you're going to see right at market is our 127, which is what I use for the D completion. So a nice bearish Gartley pattern right here on the pound yen. We are up in that zone. So if price gives you the price that you would like to get involved with on the open, right? It's a little bit past it right now, but you never know what could happen. We may spike up a little bit. Then this is an at market sell. Following up on the pattern theme, we have another potential advanced pattern formation here on the dollar yen, along with a structure-based trade. This one's going to be a little bit different. So I'm going to start with my same swing high to swing low as we did with the pound yen. But you can see this time, my first retracement doesn't come to the 618. Instead, it just comes to the 50%, which means I'm going to be on alert for a bat pattern instead of a Gartley, which means that completion point, the point in which we want to trade, is going to be at a different location. I don't need the 127 this time. I'm strictly looking for that 886 Fibonacci retracement and the zone from that 886 to our X leg. Now, something else can happen here, right? In the aftermath of our beautiful 2618 trade, by the way, guys, if you didn't watch the video, I put up a video of it, today, which is Friday, which means yesterday, if you're listening to this on Saturday, breaking down this trade from start to finish. I think the video is literally called Trading the 2618 Strategy from start to finish. So make sure you go back and watch that. It's a quick one if you're interested in the 2618, but well done for all you traders that took advantage of that. Now, again, we have that rallying up to a potential bat, but we also have something else happening, right? we have broken and closed above a previous level of structure high, that B leg. RSI has gone overbought, so we're overextended. We started hooking a little bit on the way back down. It would not shock me if we saw a little bit of relief, maybe a little bit of a pullback into this previous level of resistance, which would be expected to now act as potential structure support. So if price action does that, this is also a potential pullback trade, see, again, it's Friday night. I've been working all day, which can be used as an entry reason or an entry area. I don't know how I'm going to get through the rest of these pairs, guys. We could look for a pullback trade and then look to trade this up bullishly to the 886. And then, as we spoke about before, I can't remember if it was on a YouTube video or in the live room, but we spoke about a stop and reverse, and I'll just reteach it anyway. What a stop and reverse is, right? If you're someone that's interested in taking the bat pattern as well, it's when you go from one position directly to another position. So if you were trading 2 units on the way up for this pullback trade, then what you would do, right? This would be a buying of 2 units. My kids just came in, so it's probably going to get loud. If you're buying 2 units at this level right here, come on, really, Akil? Here we go, B2U. Does that work? Here we go. Then what you would want to do is you would want to sell 4 units up at the bat pattern completion. Now the question is, why would you want to sell 4 units? Well, because in selling 4 units, what you do is you cash out of your first 2 units, ka-ching, ka-ching, and now you have a short position of another 2 units, which is what you want it to be. Sorry if I made that more confusing than it is. Brain is mush Friday night. You got to deal with me for a few more. That's all, I promise. So I skipped past a couple, mainly because brain is mush and I don't know how long I'm going to last. But the Aussie yen here is also very similar. You can see this beautiful structure shelf that we have broken. Resistance, resistance, resistance. And now we broke and closed above it. We're looking for the exact same thing here. A potential pullback or maybe some type of sideways consolidation, like a high and tight flag. But ultimately, there's nothing in the way, right? If I'm just drawing out my ebbs and my flows, my ebbs, my flows, right? You can see that there is nothing here in the way of relevant structure. Therefore, if price action were to go up from this level, I would expect it to go all the way up to retest these highs right here. That's a pretty decent range. I'm not too familiar with the Aussie yen and it's ATR and whatnot, but it looks pretty big. Let's see how much it is. Yeah, it's about 150 pips, maybe 100, maybe close to 200 max. So a decent, very good opportunity here as well, if you can catch that bullish move up. So I decided to skip past a few more, again, just to keep things simple. But Gartley pattern, there we go, Akil. Cipher pattern was here on gold. You can see it played out nicely. If you're someone who has the correct stop losses on, you were safe. If you got cute and tried to get them really, really, really tight for whatever reasons, you were probably skunked out. So again, a good lesson on how it's always important just to give yourself enough breathing room. Don't be the trader that gets got by these type of moves, where you're gonna get got at some point. There's always gonna be a trade where you just get nipped by like a pip or so, but the idea is to get got less than you don't get got. Got it? Anyway, we have broken and closed below this previous level of structure right here. Therefore, I'm expecting a continuation to the downside. Now, this is another tricky one where there's not a real clear path of where we would go to the downside, right? The first choice I would have is about right here. So this sets up 2 options. One is the continuation trade in the opposite direction that we showed you in the last few pairs, where we wait for the pullback and then the move down here. Another one is if gold just keeps tanking down to this level, this is going to be a nice area for a counter trend trade, meaning a nice area to look for that buy. I say counter trend in the short term because the bigger term we're still bullish, which would make this a shorter term counter trend trade within a bigger term trend continuation trade, right? You guys get what I'm saying. Now, the one thing to be aware of is this underlapping level of structure. And this was a long and or hard and expensive lesson that I learned in my trading. When we do have 2 levels of structure, the lower one is going to be the more important one. So I mentioned in the past pair we talked about, or on this pair, sorry, again, brains all over the place, about tight stops. This is one where if you do get a trading opportunity right here, if you put a stop loss right here, it's, let's put it like this. You may have to do it because of your rules. And if you do it, that's okay, as long as you understand that it's not in the greatest position. But if you're able to, it's best to get your stop loss below this level. You don't want to get too cute with this, because what happens here is that the market will typically kind of probe this level, knowing there are all types of stop losses here before it rallies up. So just keep that in mind. Again, sometimes there's nothing you can do with it. You just, the stop loss is what the stop loss is per the trade setup. You just have to eat it. In those situations, you just have to mentally tell yourself like, hey, I am mentally prepared to possibly be tricked and tickled. And if that does happen, I need to accept it and not go crazy and start revenge trading, because a single losing trade never hurt anyone. But when you start revenge trading, that's when we start to see the downward spiral that sinks many traders' ships. Now, before this ship totally sinks, I'm going to get you guys out of here. Hope you enjoyed the video. Sorry, I'm not at my best today, but I hope you got something out of it anyway. If you did, leave that like button a hit. Leave that like button a hit. Leave a comment. Hit that like button. Just do the things to support the channel. I feel really, really bad about this video, so hit something or leave me a message, and it'll make me feel better, because, yeah, this is a rough one. But hopefully the analysis was good. And until next time, plan your trade, trade your plan. Take care. Oh, make sure you watch that 357 Trading Coach podcast episode. It has caught fire. So throw yourself into the fire as well. Bye.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is war.